We are on the air. How's it going, everybody? Good to be back. Ed Ponsi here, your FX educator. You're on behalf of FX Street. Let's get started. We have a lot of risk events coming up over the next couple of days. A big one involves the European Central Bank and the Euro. So I want to start you out right away. Let's go with the 5-minute chart here on the Euro. And we want to take a look at the 5-minute. Any moment now, we're going to see a sharp drop. Really interesting headlines this morning. The ECB is tomorrow, but you can see a big drop on your chart. And that comes at around 6:15 a.m. New York time. What happened? It's very interesting. According to Bloomberg, the European Central Bank is going to reduce its inflation forecast. I don't know if they're going to reduce that tomorrow. But, of course, all of this stimulus is designed to create inflation. And inflation is considered positive. And they're cutting their inflation. The European Central Bank has not officially done anything. This is a rumor. And this is a report from Bloomberg. Bloomberg says that the ECB is going to cut its inflation forecast. And what this does is it pushes rate hikes farther into the future, and that depresses the euro. So you see the euro getting knocked down about 60 pips on the chart here this morning on this rumor. It's not really news, it's really a rumor that's being reported by Bloomberg. So tomorrow morning, we're going to hear from the European Central Bank about 24 hours from now. Right, we're going to get a press conference starring Mario Draghi in approximately 24 hours. And at that point, we're going to find out if this is true. You can bet that at the press conference, Draghi is going to be asked about this. Is this true? Is this something that you have planned? Pardon me. My voice is a little bit scratchy. Please forgive me. So I'll be drinking a lot of water. So tomorrow's press conference is going to be very interesting for the European Central Bank. And so that's one of the 3 risk events that's coming tomorrow. Nobody believes that the European Central Bank is going to raise rates tomorrow. Right now, the key interest rate, the minimum bid rate is 0%. It's been 0 for quite a while, and it's going to stay 0. The deposit rate is negative 0.4, and it's going to stay negative 0.4. So the rates will not be cut. The rates will not rise. But the inflation forecast might change, and that's not necessarily a good thing. Okay. All right, so here we go. So that's one event tomorrow. The other one, of course, is the UK election. That's number 2 on your list. The UK election is tomorrow. Theresa May is still going to be the prime minister, we assume, after tomorrow. But this is for houses of parliament that are going to be elected. May called this election because she felt she was in a dominant position and she felt she could gather more representatives. However, now, according to the polls, it looks like she's going to lose representatives. Of course, if there's one thing we've learned over the past 12 months, it's that you can never be sure when it comes to these polls. You just don't know. All right, so anyway, tomorrow's election day in the UK. Good luck, my friends in the UK. And third on your list of event risk for tomorrow is the head of the FBI, or perhaps the former head of the FBI. I'm not even sure. In the United States, I haven't been following it that closely. He's going to testify in the United States in front of the U.S. Senate. So who knows how that's going to go. So all this is happening tomorrow. So I wouldn't be surprised if the markets were very quiet with all this event risk coming, particularly the euro, the pound, and the dollar. So we might want to focus our attentions outside of the euro, the pound, and the dollar. Now, that admittedly doesn't leave much, but it still leaves a lot of space to play around in. It still leaves the yen, the Aussie, New Zealand, Swiss franc, Canada. All right, so there's still a lot of activity out there. But it's interesting, right? There's quite a bit. Everything seems to be coming to a head at once, as it often seems to do. Right? You get these days where there's absolutely nothing happening, and then you get these days where everything seems to be happening. And tomorrow is going to be one of the latter of those two, when it seems like everything is occurring. I have some good news, though. All right, I'm going to go to the daily here on dollar yen. Now, yesterday the stock market had a down day, and when the stock market has a down day, it sure seems like dollar yen is just a pushover, and it really seems to fall hard. Dollar yen is closing in on target number 3. Now, let's talk a little bit about trade management, because this is an interesting situation. You know, we initially set up this trade with the stop above this trend line. We hit target 1 and target 2 on the same day. There was a little bit of a bear flag rally, right? This is your flag pole. This is your flag. The price spilled out of the flag, didn't really shoot out of it, but kind of spilled out of it. And the trade's been working, and it's getting closer to target 3. So what we do when we hit the first target, right? When we hit the first T, the first target, the stop comes to break even. And this way, we've already put some profit in our pocket. And the worst thing that can happen is the price, then we're stopped out at break even on the rest of the trade. So at least we have a winner, right? We hit the second target, we put more profit in our pocket. Hooray, right? And the stop comes down to target 1. And now if we get stopped out, we get an even bigger winner. And we win on all 3 portions of the trade, because this is not a break-even stop. This is a profitable stop. So far, so good, right? But right now, you look at this. We are 1, 2, 300 pips away from the stop, and we are less than 100 pips away from the target. At this point, it would pretty much be unacceptable for me to get stopped out way up here, because I only have to go about 75 pips to hit my last target, and would have to go 300 against me to hit my stop. So there's a couple of different things I can do. One of them is this. I could just dump out of the whole trade. And I might do that, because you have to understand, tomorrow is likely to be extremely volatile. Okay? There's a good chance that tomorrow will be extremely volatile. And why should I risk giving up all these gains? So there's a very good chance that I will not be in this trade going into the triple event risk, right? What do I mean by triple event risk? Tomorrow we have the European Central Bank meeting, and we have the FBI director testifying in front of the Senate, which could put the president into a lot of trouble. And we also have an election, a big election in the UK. Three things that could create a ton of volatility. I may very well dump this trade and just cash it in, because if I close it here, look where we entered. We entered above 113. This is about a 400 pip gain right now. And you think I'm going to hang around here and try to squeeze it into 500? I could, but not. But it's hard to justify doing that in the face of all of this risk. Otherwise, I wouldn't even think twice about it. I've certainly held on to it for a long time. How long? Well, today is June 7th. We entered this trade way back here, somewhere around the middle of May. So it's been, what, 3 weeks? This leads to another thought. The big money is in the higher time frame. I can close it right now with a 400 pip gain. I don't think you're ever going to get a 400 pip gain on a 5-minute chart. It's just, I've been trading this for a long time. I just don't think it's going to happen. I'm busy right now, sweetie.
Bye.
Have a good day. Okay, so kids. Anyway, if I close it right now, it's in the books forever, and I'm tempted to do that, but I think what I'm going to do for certain is this. I'm going to bring that stop down to here. So I'm going to lower that stop just a bit more. Okay? With an eye on closing the whole darn thing. So I've locked in more profit, and I think I'm sure of this. I'm not going to walk into tomorrow holding this. I'm not going to walk into the ECB meeting. So 24 hours from now, I'll be here with you tomorrow, 24 hours from now, as this ECB meeting unfolds, and as Mario Draghi's speech unfolds. I'll be right here with you on Forex Street. But you know what? I'm not going to be in this trade because I'm not going to give it back. What for? So I can squeeze 75 more pips out of it? No thanks. That's okay. It's not worth the risk of what I would give back. Okay? And of course you could say, well, we could bring it down to here. That's something I'll consider, you know. But once all these events begin to unfold, that stop is no longer dependable. Once all these events begin to unfold, I don't think you can count on that stop. I think that stop becomes, the spreads are going to widen, and it becomes a fast market, and you get bad fills. Okay? So I don't think it makes sense to walk into there and walk into this huge event risk with a 400 pip profit saying, I think I'll just risk it all to try to get 75 more. No way. No way. Right? So for now, we're going to put this right here. And that's just common sense trade management. You know, how do you learn this? From getting burned in the past, right? From experience. Because I'm usually the type of person who allows things to play out, but I won't let it play out into huge event risk. Because that's how you get hurt. Okay? And if you do place trades today, keep this in mind also, right? If you're placing trades going into this, you have to keep that in mind also, that any trades you place today probably need to be short-term in nature. Either have them short-term in nature, or what else we can do. Since we expect that there were probably going to be some big moves tomorrow, we can prepare for that. We can say, all right, if there's a big move tomorrow, where do we buy British pound? Where do we buy the euro? Where do we short the euro? Where do we short British pound? Those are the type of questions we should be asking ourselves today, not tomorrow. So why is the yen going to get volatile? We're looking at a yen pair. Why am I worried about the yen getting volatile? The yen is a risk-on, risk-off currency. And it is extremely closely tied to the stock markets of the world, particularly the S&P 500, which is liable to get very volatile tomorrow. So if stocks become volatile, this currency pair could become very volatile. Absolutely, yes. Okay. So even the yen is not immune. But that was a heck of a trade. And believe me, a 400 pip winner is the type of thing that can turn a bad year into a good year into a great year. It's just one trade. So if you're having a tough time out there, just keep this in mind. It only takes one trade to turn it all around. But that one trade, you have to give it a chance to run. Not run against you. You have to give it a chance to run in your favor. Okay? You have to give it a chance to run in your favor. Okay. So, getting back to the euro. So we could see, and the euro got tanked today because of a rumor that came out on Bloomberg. We were looking at this 111 area earlier. There seemed to be a lot of bounce in this area, like here and here. And so if it comes down to 111, I think I'm looking to buy this at this point. It could come down from here, but I'm not interested in doing anything from here. I'm only interested in playing a reaction to a move at this point. I'm only interested in playing a reaction to a move. What if it goes up from here? That's a good question. I'm looking at 115. If it goes up to 115, I might short it. If it comes down to 111, I might buy it. Looks like 115, a little above 115 maybe. 115.25. But right at the current price, I'm not doing anything because I'm afraid to get run over at the current price. What about British pound? This 127.75 has been forever, it seems like, has been my sort of, I've been leaning on this area. The pound is awfully quiet today. Now, I've got my lines in place already, but I'm just afraid I might need more room than this. Like, the euro probably only moves 100, 200 pips, but pound might move more, depending on what happens. The pound could move farther. The reason why I'm saying that is euro is, we're just talking ECB policy for the next 6 weeks, and then it could all change again. But one election could change Great Britain for Let's just say longer than that. So I'm a little bit more skittish on the pound. And I'm not sure how brave I am on shorting this thing up here. It's at like 130.50. I'm thinking that I might do it, but it would have to overshoot, and then I would have to catch it on the rebound. In other words, if the price overshoots 130.50 and then turns and comes back down, I might short it. But if it overshoots by a lot, I ain't going to touch it. Yeah, the pound is the problem with the pound also. And Carlos is saying maybe let it go till next week. That might not be a bad idea because we might not know. We might not have a final result. We don't know if we're going to have a final result. And that's troublesome. So there's a lot of, there's more problems with the euro setup. To me, is less problematic. It's much more problematic with the pound right now. The pound could be a problem until next week. The moves could be bigger, and you might even get a situation where the result isn't even known until after the weekend. So maybe we will just sort of give a little more thought to this one. Let's put it that way. Maybe we'll just give a bit more thought. Okay. But that's, the size of the move is greater. The implications are greater. And we don't know. We don't know if we'll, because isn't it true that a lot of times, and Richard, you're in the UK, isn't it true that a lot of times, like, they're counting the votes through, like, for days? Occasionally, that happens. So, yeah, I'm probably going to lay off of that for now. I'm just saying though, like, just game planning, sort of. This is also an interesting area down here. If it fell this far, I might be tempted to get involved. 125.50. You see all this resistance here? Like boom, 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 boom. Can't get through? That would be tempting. This is too close. This 127.75 is too close. Well, never a dull moment, that's for sure, right? I think we might be better served. The other thing about this is also, as far as the FBI testimony in the U.S., nobody knows whether that's going to be bullish or bearish. In other words, even if you told me that, if the head of the FBI says something really, just accuses Trump of criminal behavior, I couldn't tell you for certain if that's good or bad for the dollar. I couldn't tell you. I don't think anybody knows for sure, to be honest, whether that's good or bad for the dollar. But I will tell you this. Dollar shorts have made a ton of money recently, correct? Look at all the money they've made. Right? And then look at this. Today, what's happening? The shorts are covering. Dollar shorts are covering. Why? They're just getting out. In my opinion, they're just getting out. They're not placing their bets ahead of this event. They're just getting out. They're saying, all right, we've made some money. Let's get out. Richard says results tend to be fairly quick. Final exit poll are reasonably reliable. First pass the post-voting system, we tend to know fairly quickly. Derby, my home, was decided on 41 votes. That's a close vote. Wow. So, but I think the pound is the one thing probably that has the greatest risk to it. Let's take the one thing that I find the most intriguing is New Zealand at this point. Just green, green, green all over the place. I mean, we set this up, but it just never pulled back to the entry points. It just smashed through all the targets. Well, not all of them. 2 of them so far. Just smashed through. It's just smashing through the targets without pulling back to the entries. Just can't get in, to the entries. It's because it won't pull back. So if you're going to trade, you want to be short term anyway. You want to be 5-minute, 10, 15-minute maybe. And this way you're not in for quite as long. You maybe want to be, and that's not for everybody, obviously. Some folks are, long-term oriented. Some are short-term. You could be both. But like on the 15 here, you're going to get more buy signals, obviously, on RSI. It doesn't take quite as much of a dip to get that buy signal. And so, for example, let's pull that up. By the way, those helicopters were swirling around here on Monday. There was apparently an escaped convict in the area. So I looked out back after I was done the second session. There were 2 helicopters circling my property. I went to the gym and I'm checking, and I'm on the treadmill at the gym. I'm watching the television, and they're saying there's an escaped convict, and I'm thinking, oh my God! I called home and I told my au pair, hey, put on the alarm. Anyway, on the 15, you'd be looking for something like this, right? Oversold. Here, it doesn't quite happen here, right? It doesn't quite happen here, but you'd be looking for stuff like this. On the 5, you're going to see more of them, right? At least you should. There we go. Yeah, there was 1, 2, 3. There's more of them, but they might not be as good. But this is a very good one right here. This looks pretty good right here. This one here, not so much. But in other words, I would just be doing the same thing, but just using my entries on a shorter time frame. Because I don't, I'm looking for a quicker entry and a quicker exit right now because, frankly, if I'm not in trade, I probably want to be flat going into tomorrow. So that's how I do it. I mean, obviously on the daily, I'm in an uptrend on New Zealand US dollar. That's pretty obvious. I'm in an uptrend. So I can only go long, right? That's my rule. So if the trend is higher, I can only go long, period. So I ignore the sell signals because I'm in an uptrend and the sell signals aren't going to work. If you sold here, you just got run over. And here and here and here, you just got run over, right? And if you sold here, you just got run over, right? But if you bought here, and if you bought particularly here is really good. This one's not everyone's going to work. If they all work, this would be way too easy, right? But I think you're going to end up making money. And it's not ideal. I prefer, obviously, to play it on the longer time frames. But I don't think you can set it up that way today. I just don't think you can. Unless you're going to set it up for something after tomorrow. All right. So that's what I would be looking to do. I'd be looking to do it on, particularly on New Zealand US dollar. Could do the same thing on Aussie, right? And that's probably the way to go. All right, gang. That's going to do it for the first session. I hope you enjoyed it. I'll be back in about 30 minutes. We'll do our second session of the day. So I hope I'll see you then. Until then, it's been Ed Ponsi on behalf of FX Street. Thank you so much for listening. I'll see you back here in 30 minutes. Thank you so much.